Hi everyone, welcome to She VC. I'm your founder and host, Gayatri Sarkar. She VC is all about learning about venture capital and how to change the 2.2% female founders investment status quo, but also about learning venture capital by traveling the path from the associate level to the partner level. So we have an amazing and very talented venture capitalist with us who has traveled that journey. She personally and through her various journeys in other funds had invested in Guild Education, WP Engine, Dime. She's a managing director at General Catalyst. Many of you know General Catalyst are proud investors at Stripe, Airbnb, Snapchat, Warby Parker, HubSpot, Levingo, and currently she's on the board of Predictive Index, Teamwork, and Lido. So welcome, Holly.
Thank you. It's great to be here. Thanks for having me.
Holly Maloney happens to be the managing director at General Catalyst, and we are super excited to welcome her here and especially to learn from her about her journey. And as Holly, you know, it's like VC is a very hard industry to prepare for. There's no MBA or coursework. So tell me about your experience, your journey, how you became managing director of General Catalyst, and especially your role in the growth fund management.
Yeah, no, absolutely. Happy to share a little bit about my story and background. And it's actually funny that you mentioned the fact that there's no coursework on venture capital, because when I was an undergrad at Bowdoin College, it was absolutely the case. But on Friday, I was actually a guest lecturer at a class that Princeton now offers for their undergrads on venture capital. So wow. I thought that was an amazing offering that they now have, and hopefully other undergrad institutions will catch on. But it was really fun to teach the students about what it is that I do. So by background, as I mentioned, I was an economics undergrad at Bowdoin College. Right out of undergrad, I actually did investment banking for 3 years. So I decided that was the best educational foundation for me, and something that could take me potentially in a number of different directions, because quite frankly, I wasn't sure what my path was going to be from there. But I wanted to be focused. So I decided to join a boutique investment bank in Boston that focused exclusively on growth stage software companies. So we helped with public and private financing opportunities for the businesses and with M&A. So both buy side and sell side M&A. But it's a really interesting time because it was right when business models were starting to convert from perpetual license and maintenance to subscription. It was when the cloud was starting to emerge as something, even though people couldn't really yet define what it was. This was 2007, 2008, 2009. So it was really interesting to understand how both investors and strategics saw this business model transition, and the ultimate dramatic sort of rise in the view of how software companies could be valued in the public market. I knew I wanted to get onto the investing side from there. I was just trying to figure out what category of investing was best for me. Growth stage investing was an emerging category at the time, and what I really loved about growth investing was, these were businesses that already had some demonstrable success, so they had product market fit and perhaps the beginning of a repeatable go-to-market strategy, and were high growth businesses, so had amazing breakout potential to either create or redefine new market opportunities. But they were still young enough in their maturity, so they still really did need help and mentorship and capital to get to where they wanted to go a little bit faster. And so I was really intrigued by that segment of investing. I joined a firm called Northbridge Growth Equity, which is now known as Guidepost. It was the growth fund that was affiliated with Northbridge Venture Partners. So I joined there as an associate in 2010, and largely what the role was both to source new investment opportunities for the firm, because we are focused on growth stage businesses across the country, oftentimes may not be looking to raise capital. So we really needed needed a proactive approach to finding these businesses and building relationships with entrepreneurs, such that at the time where they thought raising capital might make sense, we were top of mind as a potential partner for them. And then doing all the background diligence on these companies. So what investment banking provided me with was an analytical framework on how you think about companies, how you think about valuing businesses, how you think about projecting out models, so three-statement models, and understanding the growth drivers behind software companies. And so that was a helpful foundation for me as I thought about the diligence aspect of growth stage investing. But what I didn't know anything about was how you find these opportunities. How do you source potential investments for our firm? Because I had been working with software companies on the advisory side, there were a number of segments of technology that I felt like I knew pretty deeply, or I guess I say deeply, you know, I had spent 3 years in the area, so how deep can you really understand it? But I felt like I had an advantage on the security and infrastructure side of software. So I decided when I joined Northbridge to go deep in those areas, and was fortunate to be able to find a number of interesting companies that we ended up investing in. But it is very much an apprenticeship model. So
Right.
when I joined Northbridge, again, I didn't really know where to start. But as you understand, finding mentors is really important. So people that are proven investors and figure out, okay, how do they go about their work? What have they done to understand, you know, whether or not investments. So there are 3 areas to think about. It's A, how do you know if an investment is a good potential investment? That's one area of skill set. How do you find companies? And then how do you build relationships with entrepreneurs and convince them that taking capital from you as an individual and from your firm is going to set them up for success? So there are sort of multiple skill sets that are required, and felt like I really gravitated toward that mentorship model, and wanted to get in as many reps as I possibly could. At Northbridge, the framework was, it was a 2 to 3 year associate position, and then people either went to business school or did something else. There wasn't a career path. But because I had been, again, sort of benefited from luck and timing and sourcing some investment ideas that we moved forward with, I loved what I was doing. I loved working with these really exciting entrepreneurs that were building fast-growing companies and interesting market segments, and I knew I wanted to do more of it. So the value proposition of taking myself out for 2 years, going to business school, and then trying to claw my way back into the industry actually wasn't super compelling for me at the time.
Wow.
I had a portfolio company that was interested in my joining them, so that was an option. But I knew I loved investing, and you know, it really was it started to be woven into my everyday life. You know, it wasn't work and personal life, it was sort of seamlessly integrated, and so I knew that meant that it was a special fit for me. And so I decided to have really candid conversations with my partners at Northbridge Growth Equity, and tried to see if there was a way that I could stay. If, you know, even though there was no path per se, I think they realized there's a fairly low risk proposition for them to see if making the transition from associate to principal was possible. And because I had demonstrated some success already, I think, and because I had a champion, I was able to develop sort of a champion in who was my mentor, and I'm tremendously grateful for that relationship. And so I was able to move from that associate to principal role. You know, I worked my butt off to show that I was able to make that transition. And really the biggest area of growth for me was you really are then the point person for building, moving the relationship forward with entrepreneurs. So it's not just about qualifying whether or not a company could be a good fit, or if a market segment is really interesting. You're really taking ownership of that. And you're really, I hate to use this term, but I still haven't figured out a better one. You're really the quarterback of these investment processes.
Absolutely. You're
and
the
making
cheerleader.
Sure, yeah,
Yes.
exactly. And making sure that we're doing our work and we're getting to conviction quickly one way or another. And I was also starting to manage people for the first time. So I was then
Great.
responsible for the development and growth of our associate class, which was really exciting. And I was, so I was really excited that I was able to kind of break the mold in terms of my career path at my prior firm. And I actually wasn't looking to leave. I had deeply rooted relationships with my partners. I had known about GC, General Catalyst, for a long time. I had known a couple of the partners here, and one of the founders of the firm had approached me. He actually, he convinced me to stop by the office one day to talk about a co-investment opportunity. But about within minutes of my sitting down, he was whiteboarding the strategy of GC and where the firm was headed, and their opportunity that was in front of them from a growth investing perspective, and he was wondering if I would be interested in joining them and helping build out the growth investing side of GC. So it took me a while to make the decision, just because again I was deeply committed to my current firm, but the opportunity to come to GC, which already had a tremendous amount of momentum and success, but also the opportunity to build something out from scratch was really compelling. And actually was able to scratch my entrepreneurial itch. And so pretty soon thereafter decided to join GC full-time as a managing director, leading our growth investing strategy. So I joined GC about 2.5 years ago. It's flown by, but it also feels like I've been here forever, which speaks to the nature of GC. Right. It's life, it's work, it's everything. And I'm really excited about the potential for what we're building here.
Absolutely. I think I love the companies that you have invested in. One of the things that I would like to talk about you, and I think we all face this problem, that venture capital is all about identifying patterns. You talked about building relationship with the partners and the other investors and mentorship, but it's also being a cheerleader of the companies that you invest. Some of the big ideas we see are very unpredictable, and sometimes they come from a very non-sexy market, and sometimes those investment decisions can be non-consensus among partners. So how do you find such investments to invest? And tell me some of the investments that you have done, and you found it very odd for you to invest, but you believed in the founder or the product market, and you went ahead with it.
Yeah, sure. I mean, we scour the earth looking for companies and opportunities. Part of our strategy at GC that's a little bit unique from a growth investing perspective is we do have executives in residence. I have 9 XIRs that I work with really closely. These are recently successfully exited founders and CEOs. So I have never been the CEO of a software company. I'm not going to pretend that I have been, but I've been a career growth stage investor, and there's a tremendous amount of pattern recognition that comes along with that. So now being able to also team up with someone with deep operating expertise and sort of package that up and to deliver it to companies is a really compelling proposition for them. But it also helps us to focus on specific themes and sectors, whether or not they are, sexy or unsexy. A category that I'm about to spend a bunch of time in is manufacturing software and technology, because, if you look at some of the underlying software platforms that are powering one of the biggest areas of our economy, it's pretty incredible how legacy a lot of these systems are. But in terms of companies where we have invested historically, we almost always look for, okay, what are the segments that maybe aren't sexy, aren't as crowded from a company and an investment perspective, because that's where we actually feel like we might be able to see and drive outsized returns. One example of a company that I invested in about a year ago is a company called the Predictive Index, which is in the broader HR tech category, which for a long time people were really negative on. They viewed it as an unstrategic category that, HR leaders, how much budget do they really have in a downturn? Is it going to be the first category of technology that's wiped out? But I fully believe that there's been a fundamental shift in how every company, or at least a lot of companies, both small and large, are rethinking the importance and the value of the individual employee.
Right.
How do you make sure you're finding the right people, placing them in roles where they're likely to see success, make them successful,
Yeah.
coach them, mentor them, and be able to retain them, because retention is a huge advantage, because losing great people is really expensive for many different ways.
Yes.
And so we did decide to go deep in, kind of broadly speaking, human capital management space. There was a company that I had known called the Predictive Index. I actually knew them for a couple of years before investing. So it was really about, I know the company was interesting, getting to know the founders, figuring out what was really important to them. So much of this business is, sitting across the table from a CEO and trying to figure out what really matters to this person, so that you can then craft the relationship building process based on what those things are. And it's
Absolutely.
so different from one entrepreneur to the next. But what PI does is it's at its core, a behavioral assessment platform. So it's a 6-minute assessment. So it's super easy to do, easy to ingest, and you can have every person in your company and every potential applicant take this assessment. And the right way to think about it is really the data ingestion engine.
Yeah.
So they now have tens of millions of data points on people that power the rest of their software platform, with the whole thesis of, based on who people are you hiring the right people into the right roles? Are you shaping teams and communicating most effectively based on who someone is? So if you have a certain strategic initiative at a company and there's a specific project with specific goals, is the makeup of that team actually set up for success? Like, do you have the right DNA and the people working on that to drive the right outcomes? And then as a result, do you have a more engaged workforce? So they're really closing that loop on the talent life cycle for businesses, and for the first time, allowing companies to align their talent strategies with their business outcomes. So there is this real demonstrable ROI, and therefore should be a really interesting platform. We're really excited about the opportunity and the category that they've embarked on creating, which is talent optimization.
That's great. That's great. I love the investments that you're talking about, and Channel Catalyst invest in early stage and also in growth stage.
That's right.
When we met last time, we were talking about a full stack VC fund and how that shapes in venture capital industry, considering it's one asset class, which is also cyclical. So can you please talk about what do you think about a full stack VC fund is?
Sure, yeah, because the history of GC is that we started out only doing really early stage venture investing. So we actually would start companies at our office, which we call hatching. We do seed investing, Series A, and it's really through the success of that early stage investing where we had the ability to start to raise larger pools of capital. And the reality is there's only so much capital you can invest at the very earliest stages. So from a diversification perspective, we started to diversify first geographically. So we started here in Harvard Square in Massachusetts, and then we moved to the West Coast. We opened an office in Palo Alto, then opened an office in New York, and now we actually also have an office in the city of San Francisco.
Wow.
And then we started to diversify a bit by stage. And so what we saw was that with our breakout companies that we had invested in at the very earliest stages, all these other firms were coming in and investing larger check sizes, and we're still generating amazing returns from those follow-on investments, whereas we were only doing our pro rata, if that. And so we were like, if only we had the ability and had access to a larger capital base to concentrate more heavily in our best companies, we'll still have the ability to have a slightly more predictable, breakout potential through that strategy. And so now at GC, we're investing out of our 9th fund, which is a $1.4 billion fund, and we do everything. Thank you. We do everything from, we still start companies and we can write, $100 million growth stage investment. But the whole value proposition for the entrepreneur is that we can back them and partner with them through every phase of their journey, and that we have the access to capital to support that, and we also have the expertise from an investor standpoint to provide them what it is they need as they scale. We also have these amazing executives in residence that can provide the operational help when companies perhaps get to an area of scale that they haven't seen before. So we think it's a holistic view for the entrepreneur, knowing that they'll have this capital partner throughout every phase of the journey. It allows us to concentrate capital into companies that have incredibly promising market positions and opportunities, and that we think are either creating new markets or are completely reinventing what are really big and dynamic markets. If you look at, the most valuable companies in the world by market cap and the number of them that are now technology companies, we're just seeing that, it's no longer the story of, invest in a company, grow it to 100 million and sell it. It's, how do we build, companies that can generate billions of dollars in revenue, and again, have a capital base that can support that thesis.
No, this is amazing. The reason I asked that question, because I'm finding a lot of other funds that are also creating a full stack VC fund. And I think there's a rise of full stack VC funds right now. I want to go a little bit segue from the questions, is that you had been part of this amazing company's board. How do you prepare yourself for board meetings? And this is my personal question, because I sit on a few companies' board and I find it sometimes difficult to prepare for different kind of board meetings. So how do you prepare yourself? Because board meetings are also very important to align everybody, at the same time help them build and scale those startups.
Yeah, it's a really good question. And because every company is a little bit different in terms of, where they are in their maturity and what the challenges and opportunities might be. When I was first sort of a rising associate to principal, I tried to attend as many, board meetings as I was allowed to. It's because it is a sensitive topic. I mean, this is the reason why boards of directors are in place, is from a governance standpoint. So if you then just allow people to, from the outside, to attend, it is a sensitive and closely held discussion. But I just, I would learn as much as I could from people that I had seen as developing into really successful board members, how they acted during board meetings, what the cadence was of board meetings. And what I like to do is have, one strategic topic per board meeting, because you can't cover everything. There's so much going on in these high growth businesses. And the board meetings should never serve as a financial update or a readout. So,
I hate that.
Typically what we encourage companies is, you send out your board package, hopefully, kind of 5 days in advance. It's plenty of time to prepare. And so then it's really a dialogue, and it's a dialogue around, okay, based on the material that we've seen, what are the key questions? And then there's always one strategic area of focus where typically, the C-level executive that sort of owns that piece of the business will sit in on the conversation and really guide the discussion. So it should never be, management teams, again, reading out to the board, but more of a dialogue where there's already a deep understanding of, okay, here are the key metrics of the business. This is where we are. This is what we achieved this quarter. This is what we're working on. And then having a conversation and figuring out, okay, with this collective group of people, how can we move these initiatives forward more quickly? How can we be helpful? What are the resources that we can bring to the discussion? And every company has its challenges. Not every board meeting is going to be, about performance that is up and to the right. And so it's really getting to the heart of the critical issues that may be at present, and not just glazing over and talking about all the things that are going well, because there's always going to be something that's lagging. And it's like,
Yeah.
okay, we know all these things are going well. That's great. If there's something that we can be helpful with, let us know. But let's really drill into this piece of the company that might be slightly underperforming.
Yeah, I love how you explained it, because I completely agree. I think board meetings is not the place to give financial updates or
Right.
basically stating out all your reports. It's all about brainstorming, because you have the best of minds who
Mhm.
have vested interest in the
Yeah.
company, and that's why you need all this great board of directors. Um, Talking about coming back to venture capital,
Mhm.
we and I met at the All Race platform,
Yeah.
and I know you're very passionate about that platform. And venture capital, we don't see much of a disruption. It's we always see a different kind of different. Obviously, there are different investment verticals that funds are coming up, but can you talk a little bit of biases and prejudices that play in the effect, and that's how how Always is trying to create that platform to combat that.
Yeah, I mean, All Raise is an amazing organization, that started really on the West Coast and now has chapters in New York and Boston. And I'm lucky to be helping to organize our efforts here in Boston locally. And it's really about amplifying the voice of female funders and founders. And how do we take this community and make sure that the opportunities to mature and develop the next generation of female venture capital partners is even better and more straightforward than what it used to be, and that we can really help to organize, because the organization and sort of the amplification of what's already going on is really critical.
Yeah.
Yeah, I think it's no secret that unfortunately the VC industry has been one that has been very male dominated for a long time. I think in the last 5 years, there's been some really interesting movement, but we still have a really long way to go. I still have
Yes.
yet to invest in a company where the boardroom is 100% female. It is, one of my boards is almost 50%. But what Always is doing is, again, we have these different cohorts of organizing local women entrepreneurs and doing, boot camps and training to make sure that the resources are available for emerging entrepreneurs that understand, okay, this is how you think about fundraising, this is how you think about recruiting and talent development, and making sure you're surrounded by mentors that can help you succeed. And on the investor perspective, it's similarly organizing the groups of female partners that are already have some experience, and making sure that you're providing access from a hiring perspective, really widening the funnel of women candidates into pipelines, and then making sure that women associates and emerging principals have a really clear mentorship model of this is what
Absolutely.
it takes to progress in a career, and providing really tangible training of and this is how it actually works.
Mm.
Every firm is a little bit different and slightly
Yeah.
opaque in terms of training and career progression and that sort of thing, and so it's sort of demystifying that a bit cross firm.
No, I think what you said speaks volume about how venture capital is as an industry. And as I always say, that venture capital is not a lifestyle. It is a lifestyle. It's not a career. So it's not
Right.
like it's 5 to 9 job and Saturday, Sundays, you're not a VC.
That's exactly right.
Yeah. So my last question is how do you prepare yourself for
Yeah.
a career, which is almost a lifestyle?
Yeah, and it's like you just have to figure out how to segment things out. And so what I try to do is I think about my week is focus on, portfolio company stuff one day, focus on new opportunity sourcing another day, focus on the mentorship of my own team another day, and then just meeting other great people another day. And that tends to be breakfast meetings and dinners and all of that. But yeah, it's really just you're always I mean, I'm so passionate about what it is that I do that I'm just always thinking about, GC in every aspect of life. And it leads you to meet really amazing and exceptional people that you're going to want to spend time with anyway. And so I feel as though, things that I do socially and ends up being woven into something related to GC some way, shape, or form, people that we can collaborate with. I mean, being in venture, it's all about creative thought and knowing that you can always learn something new from somebody. So even if it might be, getting together with folks that are very far away from what it is I do on a day-to-day basis, it may influence the way I think about something, or the way I think about investing, or the way I think about scaling a business. So, because we're dealing with a relationship-driven industry, and sort of an industry focused on scaling companies. There's just so much that you can learn from everyone that you interact with.
No, this is great. I mean, thank you for taking your time today.
Of course, yeah. Thanks for having me.
And also, we were able to look into how you analyze various thinking models, and also talk about the rise of the full stack VC fund. So thanks, Holly, for your time. I know you're very busy.
No, yeah, it was my pleasure. It was great to chat this afternoon.
Thank you. Take care.
Okay, bye.
Bye.